Hello, Oracles. Massive market sell off today to start the month of September. The Dow Jones is down 1.5%. The Nasdaq is down 3.25%. The S&P 500 is down just over 2%, and the Russell 2000 is down just over 3%. So why is the market selling off now? What catalysts do we have that have caused all of this sell off? Well, I thought about it today, and could be one of the many reasons why it's selling off. And of course, nobody's going to know for sure. But think about this. I mentioned it this morning how September is the last month of the quarter. At the end of the month, we are going to be seeing a bunch of rebalancing going on for all of the institutions and funds that are out there. Well, if you anticipate an election downturn coming over the next 2 months, and you factor in the 30-day wash rule, if companies are selling off now with looking at what was selling off today was a lot of the stocks that had been doing very well. The Russell 2000 had a big boom over the last month. Those being smaller cap stocks move a lot more percentage wise than you're going to see from large cap stocks. So big profit taking there. And of course, we saw big tech selling off massively today. We had Nvidia down over 9%, I think almost 10% down on the day today. We saw a lot of huge tech stocks down massively. That's a lot of profit taking. So a lot of these institutions and funds are selling high in anticipation of buying back in low. So if you think about the fact that they've got to rebalance at the end of this month, and then earlier this year, there was a lot of tax loss harvesting kind of preemptively earlier in the year when we got a bit of a sell off. So we've got companies taking some profits right now to try and resettle themselves up for the middle of October. So if they're going to play off that wash rule and they've got to wait 30 days, this is now the first trading day of the month of September. They'll rebalance at the end of October and they'll start buying in lightly at the end of the month. But they're going to be buying in more heavily when we come into October once we pass that 30 days. Now, it also gives them that window because we're still going to be in that election uncertainty in the month of October. We still don't know what's going on with the economy as well, but it gives them a much larger window instead of having to wait. Let's say they sold at the end of September or beginning of October, and then we have election time coming around at the beginning of November. That window is much smaller for them to buy in, knowing what's going to be going on. This here at least gives them that opportunity in the month of October to kind of feel things out and see how much they want to buy. Do they want to buy little bits? Do they want to buy a lot? Then they can anticipate, all right, how do we kind of settle things out when we get into November when election time does hit? They have a lot of this cash on the sidelines, just waiting to see what they're going to be doing when we get to election time. So I think that's a lot of what was going on right now is they're just selling in anticipation of the bigger sell-off coming over the next 2 months. And they just were doing this early on profit taking. So now I'll ask you, did you sell anything today? I did sell out of the two funds that I said that I was going to sell out of. I sold out of HIGH, HIGH, and KLIP. So I took that money, refiltered it into a few of the other plays that I have that are out there, and then left the rest on the sidelines for cash. Because I am anticipating the same thing, that we are going to be getting much better buying times over the next 2 months. Now, I don't know if once we hit the election time, as we have seen in the past, that we're going to just skyrocket from there and boom into the end of the year. I think there's still some economic factors we need to work out when it comes to that. When it comes to the Fed cutting rates, are they going to be cutting 25 or 50 basis points in September? They're most likely going to be cutting again in November. But at that point, do we see economic data that forces the Fed to cut faster? So I'm just kind of waiting to see what opportunities are going to present themselves, waiting to see what's happening with the economy, waiting to see what happens with the election before I really deploy too much more cash out there. My next phase of my plan, I have completed phase 8. I'm working on phase 9. This is saving up 9% cash into my portfolio, and anything in excess of that, I'm going to filter into my stocks and ETFs that show that they are a little bit lower than they should be based upon where I want them to be. So for me, I have my stable income plays, and then I have my long-term ETFs, and then I have my dividend growth stocks. Those there within each category are equal weighted. So within that, when one or two stocks or ETFs dips down a little bit more, I just make sure that nothing has fundamentally collapsed with them. And if they're still a strong company, I take that as an opportunity to buy on the dip. But again, it's such small amounts that it's not going to factor in too much. I'm not going to be spending a lot of cash, and I'm keeping my cash above 9% for right now. Once I passed phase 9, then I move to 10% cash. So I think we have a lot of time still coming up for buying opportunities, especially if we're going to get that recession. Some people who are saying we don't have a lot of recessionary indicators yet, but I think that we have a lot of signals that are kind of leading us to a potential recession. And I think very similar to the 2008 financial crisis, we have some people kind of kicking the can down the road when it comes to showing what true data we have that are out there, kind of letting us know where we truly are as an economy. There's a lot of retail buyers and a lot of just people that are out there right now who are getting higher and higher into credit card debt. So I think we are kind of pushing ourselves to a breaking point, and I think we're going to get there in the next 6 to 12 months. So it's going to suck. I really don't want us to get there. I prefer we didn't get there because it's going to hurt for everyone to get to that point. But as a wise investor and to prepare myself as people had seen what happens in 2008, I want to make sure that I am ready to take advantage of this situation so that I could be like one of those people who came out of it stronger on the other side. And I also want to prepare just in case I happen to be one of those people who maybe loses their job. I want to make sure that I am prepared to be able to handle that as well. And so going back to why the market sold off today, again, that was just my initial thought, was that there's a lot of institutions and funds that are just selling in anticipation of us pulling down significantly more over the next 2 months, making sure they want to hit that wash rule, just kind of keeping cash on the sidelines, and they want to sell now before it dips too much further. And of course, it's a self-fulfilling prophecy. By them selling off, it causes that downward spiral of a sell-off. But I think they may want to intentionally trigger that anyway, because they keep on doing that and then they'll sell off and sell off, trigger a bunch of other people's sell orders. Then you kind of get that, fear in the market and more people just selling off, and you get to that panic selling point. And as Warren Buffett has always said, buy when others are fearful and sell when people are greedy. We had been getting to a very greedy point recently. We've been seeing 52-week and all-time highs for many companies that are out there. And now we're kind of getting to the point where, hey, let's get to some buying time. So kind of want to push that stock prices down to get to that fear part where then, institutions and funds can get greedy again and they can buy in when others are fearful. So this is just the way they swing the market in the near-term movements and everything like that. But again, you take a look at those opportunities to buy, and I'm not trying to time the market, but we go through cycles. So I'm just waiting for that down cycle to come up, buy a little bit at that point, just kind of follow the market and see where it's going, and then let it go up from there. It's been working out very well for me so far. I'm just going to continue that trend. And of course, there's always those buy the rumor, sell the news situations where, we still do have 2 weeks until we end up getting to the Fed cutting the rates, but maybe we're just kind of selling in anticipation of that. Maybe there's other signals that are out there, but truly, I think that most of the sell-off today was just that early on profit taking before the end of the quarter, before the rebalancing really takes place, that they're trying to get themselves settled right now and get ahead of everyone else before they do their rebalancing at the end of the month. And now one of the stocks that I will be looking at adding more to at the beginning of October is going to be Tesla stock. So again, looking at the rebalancing coming at the end of the month, looking at the fact that we're going to be probably going through a dip due to the election uncertainty, looking at the Fed cutting rates, maybe getting to more uncertainty after that, more economic data, and then Tesla is going to be coming out with the delivery numbers in early October. And now looks like right now they have very strong numbers for production coming out of China. Now we did see weaker than expected manufacturing numbers coming out of China, but Tesla was bucking that trend. Tesla has been producing a lot of vehicles over there. And looking at the insured vehicle data, that is also looking strong. So it's not like they're just producing vehicles that are sitting away on the sidelines and parking lots. Seems like those are going to consumers. So we may see some very good numbers coming out of Tesla for Q3 that might surprise a lot of people. So I'm just kind of holding myself here. I've got the cash on the sidelines, waiting to see what's going to happen. Now, we do have to take into account margins and other numbers as well. And if we're getting into a darker economic time and we do hit a recession, it still could be very difficult for Tesla out of this, and the stock price might not reflect those numbers. So again, this is just something I'm anticipating and I'm waiting for, and I will do a video when we have the delivery numbers that come out. So for me, I'm just kind of waiting, but it is one of those stocks that I'm kind of paying attention to wait and see what is going to happen when we get to the end of this month and we get those delivery numbers in early October. And then the other stocks and ETFs that I'm paying attention to, especially if we are anticipating a recession or if we're seeing the economic data pointing us towards that direction, are going to be the consumer staples, which did have a strong day today. I'm also looking at REITs, also had a good day today. REITs are real estate investment trusts. They don't really appreciate a lot in value most of the time, but they do pay out those dividends and they mitigate downside risk. So I'll be looking into those, possibly some utility companies, maybe Duke Energy. These are just things that I'm paying attention to as the month goes on when we see economic data. If we're going to see the uncertainty when it comes to the market due to the election, if I'm going to see buying opportunities and I see more indicators that point us to a recession, I'm going to want to buy more of those stocks and ETFs that are going to weather that storm better than others. Tesla, unfortunately, would not be one of those. Tesla is a growth stock. So if I'm anticipating that, I may hold off on buying that, add more to my portfolio when it comes to those REITs, income generation ETFs, and other consumer staples and safety stocks that I can go into that are going to produce some dividends and mitigate that downside risk so that as we get into a recession, if the market does pull down much further, which typically it would, then I would be able to have that cash coming in to be able to buy more of those stocks like a Tesla during those deeper, darker times to be able to add more at a lower price. Again, buying those companies at a discount is how you're going to generate that bigger wealth in the future. We typically get a recession once every 10 years. That recession, once every 10 years, is the best buying opportunity from an investor standpoint that you could possibly have. So, if we only have that opportunity once every 10 years and we have one of those potentially coming, I just want to be ready for it. Now, of course, we may not hit that, which is why I'm not just selling out my entire portfolio. I'm still building as we go slowly, but I'm keeping myself prepared just in case it does happen. So, I'm kind of playing both sides. Having all that cash is going to be my hedge, having those high income ETFs, having those REITs, having those consumer staples and utility stocks. That is my hedge just in case we get that downside, and I'll be able to purchase from there. But I still have all of the higher dividend growth stocks, and I have my other growth stocks as well and my cryptocurrency just in case we don't. Because if we come out of this, no recession, and we boom after the election, I also want to be ready to take advantage of that. And again, having that cash on the sidelines, we see those signals. Cool. I'll deploy cash into the right places for growth and I'll grow from there. So that's what I've seen today. That's kind of my take on it. You guys can let me know your thoughts in the comments below. Why do you think we saw the sell off today? How long do you think this sell off is going to last? And do you think I'm right? Do you think I have any point whatsoever in this? Do you think I'm correct or am I totally off base? I have been wrong in the past. Maybe I'm wrong about this as well. And I'm open to discussion on that. So thank you guys so much for watching. I appreciate all your support. Have a great one.